Welcome to the Streetwise Property Pulse, your weekly resource for the latest Ontario financing and real estate investing updates, where we provide you with timely updates and perspectives from leading real estate practitioners, answer your burning questions, and share with you valuable tips and strategies. This is Dalia Barsoum from Streetwise Mortgages. On today's episode, we are speaking with Jennifer Hunt. She's the VP of Research at the Real Estate Intelligence Network, REIN. And we will discuss how the pandemic is impacting real estate and whether or not this is a good time to buy. Jennifer, welcome. Please tell us about your role at REIN and about the organization.
Hello, Dalia. Thank you so much for asking us to be a part of this, for me to be a part of this, and absolutely love to share a little bit about who I am. So yes, I'm Jennifer Hunt, thank you. And I have been a part of the REIN team now for about 4 years. My role is the Vice President of Research at REIN. And I love to produce research. I love to analyze data. I love to be a contribution to real estate investors so that they know exactly where to invest, when to invest, and what to do in those particular markets. A little bit about REIN is that we're a community of thousands of investors across Canada and investing in real estate, and we're a group of like-minded people in a culture of collaboration, creating an environment for success for folks to really dive into their real estate. And additionally, I think what's really important too is that I am an active investor. I'm really in the trenches. My husband and I are very focused on real estate. We've got a portfolio of 50 doors. So for those of you who are new to real estate investing, 50 doors means 50 actual units. Some of them are in multifamily apartment buildings, for example. Others are vacation rentals across Canada, actually. So Ontario, British Columbia, and also in the US, and apply a lot of the research methodologies and formulas also in the US. So that's a very much key consideration.
With a lot of uncertainty right now, should investors still buy properties?
You mentioned that there's a lot of uncertainty right now, and there absolutely is. And that's why REIN just hosted our very first, and obviously, hopefully the last COVID crisis conference on real estate. So we called it SOS, for strategies, opportunities, and solutions that are related to the COVID pandemic and how it's affecting real estate right now. Should investors still buy properties? A lot of people are asking that. Do I invest right now? Do I not invest right now? Is now the time? Is it too early? Is it too soon? And knowing where you are in the real estate cycle, driven by data, is 100% the way to go. And the question, as a lawyer would say, is it depends. And truly it does depend. Now that said, there's a couple of nuggets that I'd like to share with you right now, is that I am currently buying real estate, and I've got a property that's under contract. Hopefully it closes in the next couple of weeks. The deadline is about 2 weeks, so we're looking at that. And it's very exciting times. There's very cool opportunity. But that said, I have a plan. I know exactly who my tenants are. They've been I've got those tenants already vetted, and they're signed up, and they're wanting to live there for 4 years and whatnot. So that makes very good sense. I know that that market will go down just a little bit more, but for the right property that's cash flowing, that's a buy and hold, that's okay. I know for the long haul, I'm going to be set up for success for that. So now, if you're going into another market that you don't know very well, that you don't know what to do with, and that's starting to just maybe be coming in the slump, you might want to wait and find out how the pandemic shows up. What really materializes? Is there going to be a second wave? So again, back to my initial statement of it really does depend. And knowing your market research, your specific market, not just the province, not just the city, but even down to your neighborhood and your tenant profile, your clients. Who are they? If you're in short-term rentals, you'll have to rethink your strategy, and that might not be a good time to buy for those properties. But if you're in a longer term, or you're in a certain segment a niche market, whatever that is, and you know it inside and out, it could be the perfect opportunity. So you really do need to take the vast majority of knowledge in order to understand where you are in your real estate cycle and your real estate career, I should say. So where you are in your real estate career, and then applying market, and then applying property, and all of these different analysis tools that we at REIN teach and we also provide to our REIN members. And that's very, very important. So the answer, yep, you may want to be buying properties soon. You may be wanting to be buying properties now. One other little comment with regard to that is a quote by one of our REIN members. His name is Thomas Byer, and he came up with this, and it's, don't wait to invest in real estate. Invest in real estate and wait.
Jennifer, what impact is the pandemic having on the short-term trends, and what should investors focus on?
The pandemic. So COVID-19 has definitely had an impact on real estate, and it's interesting and so important because at REIN we look at economic fundamentals that are drivers in the real estate market. And so a lot of conversation is around listings and days on market and sales, and those are important. They're very important metrics, but they're not at the foundation. And we have a different conversation at REIN. We are looking at different metrics. We're looking at jobs. We're looking at GDP, economic health. We're looking at jobs, and we're looking at population. And the economic impact of COVID-19 has been severe, with over 2 million jobs lost in Canada just in these short few weeks. I mean, we're looking at just a couple, 8-9 weeks or so, that it's been a dramatic decrease. And that is going to have a severe impact on the rental market as well as the housing market. Really, and this is what you've got to do, folks. If you haven't been doing it already, if you're already investors in real estate, you want to be managing your conversations with your tenants so closely, supporting them in finding resources that may be available to them for relief and for support that might help them through this really challenging time if they've lost their job or they've been compromised in their health. There are resources available to them, and those resources are there and intended to help support paying their rent and their groceries, which is ultimately for rental housing providers. But people need to be considerate and considering how they need to be changing their market, the way that they're operating in the market. A lot more focused on hands-on property management, managing your property managers if you have property managers, and of course, in the short term, that's what you need to do. Also, another thing that's very, very important in the short term is managing your cash flow. Make sure that your cash flow reserves can last you for a while. What is your buffers? What are your model out your worst case and your best case scenarios so that you know exactly where you're at? What if rents were to fall to 0%? What would that look like in your world? So where are your rental markets? Where are you at with your cash flow? What have you got? How can you model them so that you can understand, you know what, maybe this market that I'm in cools down and it's, maintaining about 90% in terms of rent coming in. Awesome. Then another market that you're in, maybe that's in the sort of the 70% or the 60% or whatever it goes down to, and you can model your worst case scenario. And knowing that worst case scenario, I know it might sound sad, but it's really important as a business owner to know when your day of reckoning might come. And that's where, Dahlia, as you know, being so prepared in your finances and your mortgages and knowing what could be deferred or not be deferred, because you don't need to defer it, because you're armed with information, and having the tools to be able to arm yourself with that information is a key component of what I'm get excited about as a VP of research, but also as a real estate investor. So I'm employing these tools in my own portfolio, and knowing that has given a certain huge sense of relief and satisfaction of knowing that the right reserves and the right players, the right power team that we've got in structure is really there to support through all of this pandemic.
How about over the long term? And what do you see as the impact?
Now, in a bit of a longer term, there is such an incredible demand for Canadian real estate, and this particular pandemic may even exacerbate and amplify the desire that Canada is a relatively safe haven. It's got a decent democratic government, and people want to live here, and that immigration policy hasn't changed. It's just been frozen as well. And so with all of those components sort of in play, we're really looking at an opportunity here for the long term that rental demand is going to increase significantly, very significantly, for a number of reasons. But there's also some other considerations that we're taking into play, is what kind of asset type are we looking at? There are going to be some changes out of the pandemic, changing the way we work, changing the way we live, and people are going to have different considerations. Transit is still ultimately, eventually going to still be a consideration for people, although for a temporary time, it's not going to be as important. But there's also going to be a push for people wanting to live in places where they have more space, where they have more green space, where they have more outdoor space, where they have more space to have their computer, whether it's a computer alcove, whether it's a computer like a den or an actual office, so that they can be more flexible in terms of how they interact with the world. Those are considerations that will come into play. So what does that mean? Well, some folks believe that, one bedrooms and studios will become more the norm because of folks wanting to be a little bit more insular. Now, I take the position that I think that this pandemic, some emerging trends from the pandemic, are that folks who were living in those single, one bedrooms or studio apartments will go, wow, I really didn't, we're social beings, humans are. And so what does that mean when they're stuck in a home for so long? And I believe, and our millennial report definitely speaks to this, as it was an emerging trend already before the pandemic, and I think it's going to be even greater in terms of multi-generational housing. So families coming together and living in a larger home with a little bit more space, their own backyards. Co-living is likely to increase, where roommates or groups of people get together, and whether they're renting or whether they're buying, again, a larger space that they could have previously afforded by themselves. So they've got more options, but they also have more social interactions in their immediate quote unquote family. So there's lots of emerging trends. It's really hard to say at this juncture because it's early days. But we can see that these were already in play, and I believe that the pandemic has amplified that, and we're going to see more trends to that. We're also going to see more trends to a certain extent to some of the smaller communities. We talk about suburbs, we talk about exurbs, and exurbs are further out than suburbs. So if you're looking and talking about the GTA, for example, Hamilton and Kitchener-Waterloo, they've almost become suburbs, almost. I mean, they're truly, it's become so in a big part of the GTA, and it's moving even further. And so exurbs are starting to look like London and Chatham, getting out as far as Windsor, because the pandemic will have affected the opportunity in a positive way, potentially, for individuals to work remotely. So as that becomes a more entrenched, not just a this is a pandemic situation, but an entrenched trend and a possibility for the future. Generally speaking, in a recession or in periods where it's a downturn in the economy, individuals group together so that they can share expenses, share their housing together, and all of those things. And I expect that trend, as a macro trend, as a larger trend, to continue.
What types of real estate are generally secure in turbulent times?
So what types of real estate are generally secure in turbulent times? I addressed a little bit of this, but I'm going to get into it even further. So there's a number of types of asset types, and then there's also within asset classes, there's certain types of real estate that are generally better during turbulent times. overarching, historically, real estate has proven to be one of those investment vehicles. And so when we look at, I'm going to start with some of the properties. So we want to be looking at properties that, 1 bedrooms and 2 bedrooms, they've got a difference. 1 bedrooms typically haven't done as well in times of downturn, or micro suites for that matter. The reason for that is because people during downturns, in recessions, what we're experiencing right now, they typically want to live together. They want to merge expenses. They want to, and especially during this pandemic where people have been exposed to, these challenging times of quarantine and isolation. Humans are social beings and they typically want to be together. And so I'm seeing already website after website of emerging opportunities for co-living. And we already saw that before, and now it's even more in cycle. Millennials were already looking to this. We were also seeing a trend in multi-generational housing that's also growing and increasing given the pandemic. People want a little bit more space. They definitely want gardening opportunities and those kinds of things. So that will be a trend that continues. We will see some changes in terms of location for sure, but we're talking about asset types and also the asset specifics. So that's when we're talking about sort of condos and single family houses as well. There's going to be a demand for those. The increase in demand for suburbs, the increase in demand for exurbs, which is further out from suburbs, is also going to increase. But the rental demand overall is still increasing because of those immigration targets. But there's also the demand for rental properties that's also increasing because there's been higher divorces based on the pandemic. There's also job losses that have made people want to maybe downsize, get out of their existing mortgages and rent, or even just change where they're renting and how they're working through this. So that's important, and an important consideration of what are people looking for. But here's the real key nugget. In terms of really turbulent times, which the pandemic may yet to shape out to be that way, and as we look at that, in those kinds of situations and across the market, we're seeing that multifamily or multi-unit residential apartment buildings are really those areas in terms of the asset type that are really insulated. So when we talk about, what are some of the adjustments or the pandemic pivots, investing in multifamily is definitely one of those pandemic pivots when you're looking to the future. That will certainly be a bright spot, and at minimum, at least the mitigated risk and less risk. So as we've heard many times before, real estate, and the data shows that real estate is that investment vehicle that really works well during turbulent times, and multifamily, because people need a place to live, and they always need a place to live no matter what. And so during those really, really hard times, those that particular portfolio, that particular asset type tends to be a winner and a longer term opportunity.
Jennifer, thank you for your perspective and time. On the financing front, folks, if you're planning on purchasing a property, it is really important that you plan your financing ahead of making a move. This really goes beyond getting a pre-approval or a quote for what you qualify for. Planning financing really involves having a detailed discussion with your mortgage advisor in regards to various aspects relating to your future deal. This includes the type of property you're planning on buying, its condition, and the areas you're going to focus on. It also includes sources of down payment and how you plan on holding title. Are you planning on holding title personally, in a corporation, or maybe investing with others? The asset class and your strategy will also have a profound impact on the mortgage terms you will get. For example, financing a property that requires a renovation is drastically different from financing a turnkey property. Financing a multi-residential property is drastically different from financing a smaller property up to 4 units. And financing a student rental or a rent-to-own is also different from financing a straight buy and hold. That's it for today, guys. I'll see you on the next episode.